All right, welcome everyone. This is Bob Maurer. It is going on 4 o'clock-ish on Friday the 9th of May. I want to do a deeper dive into a strategy that was benchmarked recently. It is strategy number 356. It is the bear spread in natural gas. So let's hop on over into the portal here and clicking on the PDF. It's one right in the middle here, number 356, Jan March Natty Gas Bear Spread. And you got the entries and exits, both the dates, the prices, and then the risk reward. So that's the one we're going to take a quick look at here. Coming over to the charts. All right. So first of all, in yellow, strategy number 356, Nat Gas Bear Spread. We are long March, short the January. Margin requirement just shy of $1,000 per spread. Then you got the risk reward in terms of dollar value, both regular entry, more conservative entry, looking to get in only at level 2. And then for the more aggressive traders, those who are looking to get in both levels and average in. So that's that. Backstory on this one, it has been a profitable strategy 13 out of the last 15 years. The two losing years were 2025, so just last year, and 2011. In terms of the incoming price, so ours is 816. That's where this seasonal started. And on day 0, the price was 816. I don't see a whole lot of correlation for that incoming price compared to those two losing years. And I don't see a whole lot of correlation in terms of the structure. So I'm not necessarily overly concerned that those might repeat themselves. Back in 2025 and 2011, it was more of a sideways to maybe a lower drift. And you can see this market's been a lot more buoyant and a lot more volatile. So not necessarily we're concerned that those could recur. There was one of the year that kind of stood out quite significantly. That was 2023. In 2023, the fundamental story, simply put, was there were some supply constraints that happened short term and really popped the market. At one point, the spread was losing over $5,000 and then turned around and became a winner. So it was one of those really crazy years where something really was a catalyst to help, definitely make the market off balance. And it took a while to adjust back. So I don't necessarily, again, believe that that's going to happen. So I'm not overly concerned of that being repeated. So net published it, benchmarked the stop range. So our benchmark is 816. Like I mentioned, our stop is 1,000. All right, that is a range of 184 points. Each point in Natty Gas is $10. So that's an $1,840 amount of room that we're giving this in order to stay on board. That would have been enough to stay on board 14 out of the last 15 years. The one year it wouldn't have worked was that one I was just telling you about in 2023 that had the 5K loss at one point, approximately 5K. So I think we're giving it more than ample amounts of room. All right, so what are we looking to do? We're looking to get short. The market had a really strong rally from November to early part of March, and then gave back about 65% of it. Now we're getting a little bit of a bounce. And what we're looking to do, hopefully, if it lines up, is see a resumption of this downtrend. So it broke pretty hard, like I mentioned. We're getting a bounce. It would be nice to see one more leg to the downside, take out this recent swing low. It did get high enough today for first entry level to be filled. So anybody who already had the orders based on the info I sent yesterday, that'd be great. 957 is the second level. Stop is at 1,000. And then we got our targets down here at 762 and 6 double. So this white line here is the 200 period daily moving average. We do need to see the market break underneath that to get our target. So it might have a little bit of technical work to do. But that's where we're at. So our level 1 filled, level 2 still sitting on the sidelines. We are patiently waiting to get filled at level 2, and that's where we're at with this particular strategy. So everybody should be on the same page. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there, and thanks so much for watching.